Today, I'm going to be showing you how I use Bybit. Now, this is going to be the best tutorial on the planet. I'm a full-time trader, and I've been living off of crypto for the last 2 years. I've literally spent thousands of hours through those markets, learning fantastic things and also some really hard lessons. And I want to share this with you guys. You can see the excitement on my face. Now, the first question is, why Bybit? Guys, they have fantastic features. They are very user-friendly. They have a massive range of tokens and their volume is really good too. So I really use this platform on a daily basis and I actively trade on this platform when the markets are moving. Now, what am I going to be teaching you? I'm going to be showing you how to open an account. I'm then going to be showing you all the major security things that you need to understand because it's very important to always protect yourself. We then have all the different wallets. What are these wallets? How do they work? I'm going to be showing you all of that. And I'm going to be showing you how to transfer funds between those wallets too. And then you can build that into your strategy. Then it's time to get into trading. I'm going to show you how to trade on the spot platform, how to open trades, how to protect yourself. What features do I need to know? And then we have the absolute pride and joy, something that I've always wanted to teach. And it is time for me to teach it. I'm going to be showing you how the leverage platform works. Because for me, this platform, Bybit, have put themselves in a trader's mind. They have thought, what will be the easiest way that we can make this platform for a trader? Because the amount of shortcuts and different tools that you have that you can use for day trading is absolutely phenomenal. And I'm going to blow your mind with how amazing this platform actually is. Guys, I'm Sheldon the Sniper, and welcome to the Bybit tutorial. Let's get into it. Now, the first thing you need to do is you need to open an account. Now, if you look below in the description, you will find our Bybit link. Now, the benefits of using this link is you then qualify for the sign-up bonus up to $4,200. Now, guys, secondly, by you using this link does help support the channel. As you know, I love educating. And as I keep learning, I want to continue to educate you guys. And we plan on doing all of this for free. So by you using this link does help support the channel. And we really do appreciate all the support and all the love. I want to say thank you again. I love this journey. I love what I do. And it's all because of you guys. And I appreciate you very much. Now, once you have clicked on that link, it will then take you to the sign up page. And this is where you want to look to open an account. Now, all that you need here is you need to insert your email and you need to put in a password. Once you have done that, you can then create your account. Now, once you have clicked on that and you have signed in and you've opened up your account, it will then come to your Bybit dashboard. And then you'll basically see all the different features on the top. And I'm going to start you off with the first step. The first step is we want to identify the security and where to find our account details. Now, if you look at the little logo on the top right corner, you will find this little icon over here. And if you go down, you will go to accounts and security. Now, the first thing is you will see all of your account information, and then you'll go below that and you'll start to see all the different security features. And the main ones that you want to focus on is you want to add a secondary line of protection. Right now, if someone has your email and has your password, they can get into your account. And that's a problem because we leave money on there that we can't afford to lose, right? Always want to protect your funds. So you want to add a secondary line of defense. And that's where the two-factor authentication comes in. You've got 3 ways you can do this. The first one is an email authentication. We then have the SMS authentication. And then we have the Google two-factor app that you'll actually download off of the App Store or on the Google Store. Now, all that this does is if you sign into your account and you have the email version, they will then send you an emailed password or code, a 6-digit code. And when you log in, they're going to ask you for that code. And you'll have to go into your email, get that code and insert it. And you can see how that just protects you with the second line. Same with the SMS version. They'll send you a code to your cell phone number. And then you've got the actual app that you download. Now, one thing that's very important, guys, is if you do the app, you need to remember that they're always going to give you a backup code. They're going to give you a 12-word phrase. Please make sure you save that and you have a copy or two that's in a safe place or with someone that you know you can trust it with. Because if you lose that, you're not going to be able to get into your account easily. It gets quite tough. So make sure you do protect that very much. Now let's learn how the wallets work and how to actually transfer funds. So now we have a basic understanding of the security features. Now let's understand, how do we manage our assets and track all of our wallets? So what you want to do is you want to go back into your dashboard. And if you go to the top right corner, you'll find the assets overview section. Now you want to click on that, and it's basically going to bring you to a dashboard. Now this shows you the total assets that's in the whole of the exchange. Now remember, you do have separate wallets inside of the exchange, and this is going to give you the total overview, and then you're able to go into each of them individually. Now, if you look here, it's going to give you the total value that it is in dollars, as well as the Bitcoin value. And then if you go below that, it's going to show you each and individual wallet and their values as well. Now, I'm going to show you guys the two main wallets that I use, which is the spot wallets, and then you've got the derivatives, which is the leverage wallet. And you do have a few others as well. Go do some research on them and see if you want to be a part of them. I do know that there's many fantastic features on here, but I'm going to be focusing mainly on these ones. So the first one I'm going to go into is the spot. So you can see you can go into each and individual wallet separately, and you can track the assets there. Now, my basic view of a spot wallet is it's a wallet that I am using as a trading wallet where I need liquidity. So if I want to buy and I want to sell, I need to be able to do that. Now remember, I also have a long-term wallet, long-term sort of investments, but those I'm only buying, I'm not selling. I'm holding those for a few years. So that's not sitting in the exchange. That's sitting in a cold storage wallet. And then I need money that's more active. Remember, the only money you should have on exchanges is money that's active, money that you need to get in and out of, and you need to protect as well. So I use Spot Wallet as a sort of medium term sort of trading, where I'm buying something, I'm holding it for 3 months, then I'm taking profits, then I'm buying again, and I'm basically using it to accumulate a portfolio and accumulate dollars over the next few years in crypto. So what the main thing is you want to have a look is it's going to give you the same thing, the value of it, as well as in dollars and as Bitcoin as well. The first thing you need to understand is, how do I get money into the actual exchange? And you're going to be using the Spot Wallet for this. You can see here, you have the deposit section. Now, if you click on that, it's then going to ask you, what do you want to deposit? So you remember with crypto, there's tons of different coins that you can deposit. And it's either if it's coming from another exchange or something like that, or you actually want to buy some of these tokens. That's where we usually use USDT, which is the dollar token. You do get a few others as well, but I'm going to be showing USDT. But ideally, the deposit section is for you. I want to put money into the actual exchange. So you got to choose what token you want to be putting in. So if you're withdrawing from another exchange, I want to withdraw Bitcoin from another exchange, and I want to put Bitcoin in here, you need to get the deposit address of Bitcoin from here, and you need to paste it in the withdrawal section of withdrawing Bitcoin from the other actual exchange. So I'm actually going to use USDT as the example to keep it simple. So if I click USDT, I just want to send dollars, okay? It's then below that, it's going to ask me what chain type. Now, it's very simple, and I'm going to give you guys the main two that I use. It's asking you, what blockchain do you want to use? So for me, the biggest ones that I use is Ethereum, and I use the Tron network, which is the ERC20, and it's TRC20. Now, the two benefits to either, you can do your own research and see which one you prefer, is if I'm doing bigger amounts of money, I like to use Ethereum. I feel they're one of the safest platforms or safest blockchains out there. So if I'm using bigger amounts, I use them. The only downfall is they do have higher exchange fees. So you do pay quite a bit of fees. So that's why I use it for bigger amounts. If I'm doing smaller amounts and quicker transactions, I then use the Tron network, the TRC20, because that's very quick and it's very cheap as well. So I'm going to show you guys that I'm going to use the ERC20 as the example. And if you click on that, it's then going to say, it's going to give you this acknowledge button. Remember, keep this safe, keep all your addresses to yourself, but it's going to give you a USDT wallet address. This is basically your bank account details for the USDT on this actual exchange. It gives you a QR code version, which some exchanges allow you to just scan, which is nice, quick and easy. And then it gives you the actual code. Now, do you see what I did there? I highlighted it, right? But you see how I forgot one letter? Now, this is why they created the copy section. Because if you copy this address and you forget one letter and you paste it on the withdrawal section and you withdraw the USDT, you've actually put it to the wrong address and your money will then be lost. It'll be stuck on the blockchain. You'll see it, but you won't be able to actually get it. So make sure you always use the copy button, as it will copy the whole address. A nice little feature or nice little tool that I use as well is I like to remember the first 3 digits and the last 3 digits when I've pasted on the other side, just to see, just to double check. Remember, you are your own bank now. So you got to protect your assets and make sure everything is correct. You will copy that and you will then put that in the withdrawal section from the other exchange, and then you will do the transfer. Once you have done that, you will then see your USDT that you have now deposited now reflect in your account. Remember, this works with Bitcoin, it works with Ethereum, it works with all the coins. Just make sure if you're withdrawing a specific coin that you're depositing the right address for that coin as well. Don't do, I'm withdrawing Bitcoin and you send it to a USDT address. That's a problem. You're not going to find your funds and it's going to be a big problem. So that's how you deposit. Then you have the withdrawal section. Now, the withdrawal section is I want to take money outside of the exchange now, either back into a local exchange where I'm going to bring it back into fiat or these sort of things. And this is the same sort of procedure. You're going to select the token. I'm going to use the USDT as the example. You then look below that. It's going to ask for the wallet address. Now, what's nice about this exchange is it allows you to actually save addresses, similar to a bank account. So if you're doing regular payments to someone or to a different wallet of yours, you can actually save that wallet in, it's like a whitelist where you actually save it. So you'll go to this section over here and you'll look to add, and it will bring you to this area, to this dashboard over here. And this will give you the list of all the different wallets that you have actually added. And you'll look to go the top right corner to the add section. You'll add, it's either a Bitcoin address or it's a USDT address. You'll put the address in of where you want to send it to. You will then select the chain type, remember Ethereum or the TRC, and then you'll add the name in. I'll do Fred as the example, and then you'll confirm that and it will save it. So it just makes it quick and easy when you want to withdraw in the future by having these actually saved. Now let's go back there and let's go back to the withdrawal section. Now, once you have done that, remember you select the token, you select that person, you then put in the chain type, ERC20, and then you put in, so let's actually put that in there quickly so you can see it. USDT, I'll click this wallet over there. That's the Tron one. It's one that I've saved, and I'll put the amount that I want to put in, $50, and then I'll submit. And you'll also have that email sort of authentication that will ask you for a code just to confirm. Remember, always have the second line protection, just so that no one can just get into your account and transfer your actual funds. And then you'll withdraw. And then we got the transfer section. Now, the transfer section is how you send funds between the wallets inside the exchange. So if I want to put some money in leverage, I want to go play a little bit in the higher risk game, I want to send $100 or $50, if you click on it, you will see that it will ask you, it will basically tell you, do you want to send money from spot into derivatives? And if you click on the little arrow here, it will give you the different wallets that you can send to and from. And you can see on this side as well. And if you want to switch them, like here currently, I want to send some money from spot into derivatives, and I want to send some USDT. So let's put in here's the USDT over there. I want to send $10, and I click that in. You'll see how it will remove the dollars from my spot. You can see it's now been removed, and it will send it into that. And if I want to do the other way around, where I want to do from derivatives, I'll click this little button in the middle. It will show the derivatives this side and the spots. Remember, the one from the left is where you're sending to the one on the right. And I want to do USDT. I click it over there. Let's say I send $200 back. So this is important, guys, because when you make money on the one wallet, you want to take profits and you want to flush it out. You don't want to compound in some wallets. And I'm going to teach you that shortly. And I click that. Now you can see how the USDT is back and it's in that account. So this is where I'll track all of it. This is where I'll do payments, money in and out. It will all be from this section over here. You then have the history section. You can go look at all your transactions, where you either bought and sold, that you'll find in the order section. And if you withdrawed and you deposit, you'll find all of it there, which is great. So it's a dashboard that has all of the information for you, so you can keep track of everything. And then you got the next one on the left, derivatives. Oh, while I'm actually on the spot here, if you click this little button over here, you will see that it actually gives you all the different tokens, okay? This is all the tokens that are available on spot. This is what I was saying about Bybit. Look how many tokens they actually have on here. So it's really, really cool. But if you only want to find, remember, if you put Bitcoin in here, it's going to show you your balance of Bitcoin here. And then if you put Ethereum, it's going to show it over here. It's going to show you the amount of coins, and it's going to show you the dollar value as well. But if you don't have lots of these other coins, and it's just a mess to find your tokens, click this little hide zero balances, and it will show you the only ones that you actually own, which is very nice. It gets rid of all of the mess. Now, going back to derivatives, same thing. It's going to show you all the assets that you own. If I click this, it will show you what you're currently owning. And this is where you can also track all of your actual assets. Now, last thing, if you want to get fiat into the market, you will find this little buy crypto section on the left here, and you'll find the fiat deposit. So you can go in there. In my country, I'm not able to deposit fiat, so I have to go through a local exchange. I have to buy Bitcoin there. Then I send the Bitcoin from there to here. But if this is available in your country, you can come in over here. You can set the amount that you want to buy and the different payment method that you have and the currency that you are paying with. So you can see these are the current available ones that they do actually accept. So now we have a basic understanding of how to manage our assets. We understand how to deposit, we understand how to withdraw, and we understand how to transfer between the wallets on the exchange. Now it's time to learn how to trade. And I'm going to take you to my home, a place where I spend a lot of my daily time, the spot trading platform. So if you go onto your dashboard and you go to the top to the trading column, below that you'll see the spot trading section, and you'll click on that. And it takes you to the trading den. This place I get punched from the wife because I spend a lot of time here, but I love it. It's a place where I'm getting in and out of the market quite often, and I really, really enjoy it. So the first thing you need to know, guys, is your portfolio needs to be split as a basic into three sort of categories. You got a very long term, you have a medium term, and you got a short term wallet. Okay. Now the long term is something that I buy and I don't look to sell. So I'll put money onto the exchange. I'll come onto my spot, and let's say I'll use dollars and I'll buy some Bitcoin. Then I'll take the Bitcoin out, I'll withdraw it, and I'll send it to a hardware wallet, somewhere where it's a decentralized platform where I can keep that there for a few years and I'm only looking to sell at a later stage. Then I have a medium risk sort of wallet. And what that is, it's a flexible wallet that I like to buy and sell in. Very simple, like I'm going to use Bitcoin as the example. I like to buy Bitcoin cheap, ride it up for a few weeks, start selling off as it goes up. When it comes down big again, I start buying back in. And ideally, what I'm using this sort of wallet for is I want to try accumulate dollars when the markets are bullish, when they're going up. And I want to accumulate tokens when they are coming down. So I'm trying to sell off as the market goes up, and I'm buying as the market goes down. And ideally, I'm just looking for a wallet that I can accumulate dollars and tokens over a good period of time. I'll use those profits to send to my long term and for spending money and these sort of things. So for me, it's a medium risk. And the main risk of it is you buy the token at the wrong time. You buy at the wrong time and the price goes down, but you cannot get liquidated. And that's why it's important to use higher time frames, take your time with it, and really use it to a sort of strategy. So the first thing you can look at is the top left. You can see that it has Bitcoin, right? And it gives you basically the token that you are using, and you can see it's to USDT. And you can see on the right-hand side here as well, it's also got your available balance USDT. Now, this is the sort of currency that you are using as your sort of stable asset. USDT is one of the biggest, it is the biggest stable asset out there, and a lot of the platforms have them, and it has many different trading pairs as well. So if you're starting off, I would be using USDT to catch the base, and then you can understand that there is different trading pairs that you can also use. And that's what you'll find below that. You will find the USDT, the BTC, USDC, which is another stable token. But ideally, this is just a trading pair that you are trading to. And all that means is I'm using dollars, USDT, I buy Bitcoin, I use my dollars, I buy Bitcoin, I have no more dollars now, I have Bitcoin. Then I sell my Bitcoin into dollars. Now I got no more Bitcoin and I got dollars. So I just use that as my sort of basic currency that I'm accumulating. And just think of it as dollars. You know what I mean? That's the basic way of thinking of it. So that's what these are over here. But until you're more experienced, don't worry about the rest and focus on the USDT column. Then if you go below, you'll see all the tokens that are in the spot. This is why I like Bybit very much, because it just has a very massive range. Remember, you want to do research on these tokens and make sure they've got good fundamentals behind them if you are trading them. but at least it has a very big range of tokens. So that's really good as well. So you'll find all the tokens on the left, and then you're able to select the token that you want. Then what it's going to give you on the right is that it's going to give you the chart. You can see it's very similar to sort of TradingView, and it's actually got a TradingView section over here, which I really like to use, where you've got the different time frames on the top over here. And then you've got the tool column. Now, if you can't see yours, I didn't, well, the first time I came into this, I didn't see mine. You'll see this little orange section over here. And if you click that orange section, you'll see it will bring up the toolbar. And this is nice because, you know, we usually use TradingView as the platform to chart these tokens. But sometimes it's a bit annoying to jump between both. So if you're actively trading and you're doing some short-term trades, you can actually get your toolbars here and you can draw the tools on the charts over here as well, which is really nice. And you're able to actually add indicators as well. If you start to learn technical analysis and all of these sort of things, you got the volume in here as well. So it's really nice to see that. On top of that, you can see it's got the change, the percentage change of the last 24 hours, the 24-hour high, the low, the volume in Bitcoin, and all of that. Not too important. Then on the right of that, you can see you got the order book. These are the guys that have bids that are selling right now and guys that have bids that are buying right now. And in the middle is the current price of what Bitcoin's trading at right now. So as we progress in this this episode, I will give you a bit of a basic understanding when you actually use this order book. Then you got the recent trade sections, which I don't use very much. And then you get to the crunch time. This is the place where you do your buying and your selling. And you can see it's quite, you know, self-explanatory that you have the buy section, which is the green, and you got the sell section, which is the red. So you basically, if I'm buying in, I'll be on that column. If I'm selling, I'll be using the selling column. And then if you look below that, you got the two different ways that you can enter the market. You do have a third one, but I'll show this in a more advanced section. For now, you just got to know the first two bases. You got a limit order and you got a market order. Now, these are two different sets of orders, two different ways of getting into the market. Now, a limit order is you have control of the price that you want to purchase or sell, but you don't have control of the actual time. Now, what I mean by that is when you start getting active into this market and you start to understand it a bit more, you'll start having projections on where you think the price can go, right? So with limit order, it basically gives you a view where you can choose the price you want to buy. And if there's a seller that's willing to sell at that amount, your order will go through. And we usually use this when we think the price is going to go in a certain direction. Now, for example, Bitcoin's currently in a downtrend right now. And maybe we think Bitcoin's going to go lower. It's going to go to $19,000. So why must I buy right now if I think the price is going to go to 19,000? This is why they created the limit order. Because now I can basically put in an order. You see these books here of all these buy and sells. These are guys that are putting in bids of what they want to pay, either to sell or they want to buy. And if you have a look, so for example, I want to buy Bitcoin at 19,000. This is when I'll use a limit order. I will set 19,000. This is where I want to buy it. This is the price I want to buy it. And if the price over here gets to that area and you've got a seller at that zone, it will buy the Bitcoin at 19,000. So we usually use this order for something that you've got to be a bit more patient with because you don't know if Bitcoin's going to hit 19,000. Maybe it doesn't go to 19,000 from here, which means my order might not get filled. But this is where the patient game comes in because you've got to be patient and you've got to be stingy for what you are buying and where you want to buy it. But I'll basically I want 19,000. So you'll put the amount that you want to buy, the price that you want to buy the token at. Then you want to do the quantity. And you can see here, it's got a little gauge. And this will gauge out of the dollars that you have here, how much percent of it do you want to buy at that level? So they put this little gauge here in case you want to buy in different levels, like they call it laddering in. So for example, I want to buy 50% of my Bitcoin if it goes to 19,000. And I can put that in there, put the price, and I can say buy. And it will ask me, are you sure? This is the price you want to buy. This is the amount of Bitcoin you will get. And that's the amount of dollars you're going to be purchasing. And I click on that. And you'll see how it will bring up an order at the bottom, which I'll get to shortly. But what it basically did was it put 50% of my money at 19,000. Now, a lot of guys talking about a laddering in strategy, right? Where, 19,000, cool, but maybe it can also go to 18,000. So now I want to put some order in at 19,000 and I want to put another order in at 18,000. Then I can go over here and I can say the price. I also want to put an order in at 18,000. And this is where I want to put the remainder of my money. And I click that in there. And you see how that gauge now allows you to ladder in. Because sometimes the market drops and it continues to drop. And you may not get the perfect entry on the first one, but you can ladder in as it goes down. So never just put all your eggs in one basket and go at once. It is important to do this. Then if you see what happens there is if you go below, it will open the current order section at the bottom over here. And you can see how it opens your limit orders, where you see this book over here where people have got their bids in. You've also just put a bid in. Yours is sitting a lot lower than what these are over here. Yours is sitting at 19,000, but you can put that bid in there. And if price goes through and it triggers, it will then buy your Bitcoin at that price. So all that this shows over here is it just confirms that you have an order in the order book where it's a buy. This is the amount that you want to buy. This is the price you want to buy it at, the quantity, and then it's got a filled section. This usually is an important role if you've got a lot more money. If you're trading with $100,000, $500,000, sometimes the price will fall to 19,000 and you got like, let's say a $300,000 order, but there's only sellers that are up to 100,000 there. So it will only buy $100,000 of your Bitcoin there because there wasn't enough sellers at that point for you to buy it. So the price may bounce there. So only a certain part of your order actually went through. But that's when you're playing with bigger amounts. Smaller amounts, they'll go through quite easily. That's why volume plays a really big role in this. Then it will give you order time, and then you got the cancel section here. So we use the cancel section when your orders get invalidated. All of a sudden, the market pumps now, and we no longer think it's coming to 18,000. Okay, cool. I'm going to have to reevaluate. So I'm going to come cancel these orders. I'll reevaluate, and I'll put them in at a separate time. And this is the same way that it works with the selling section as well. You're in Bitcoin now, you have Bitcoin, you think Bitcoin's going to go to 25,000 from here. So you can go in over here. Remember, you got control of price, but not time. So 25,000, I then want to do 100% of my Bitcoin there, and I want to sell it. I don't have here, I will be getting some Bitcoin now, so I can show you guys, but then sell, and it will do the same thing. It will create the orders in over here, and if there is someone that's willing to buy it at that price, your order will fill, and you will then sell your Bitcoin back into dollars. So that's the limit order. Then we got the market order. Now, the market order is the quickest way to get in and out of the markets. You have control of the time, but you don't have control of the price. And what that means is it's very clear. You see this little order book over here. If you want to market execute into the market, it will get you in right now, but it's going to buy and sell from the nearest guys in the log. Right here, right now. Like it will choose the nearest guys and it will fill up your order. Now, this is good for a good volume platform for guys with smaller amounts of money, you know, especially with Bitcoin. Bitcoin's also a really high volume token. You want to find tokens that have good volume as well, especially, you know, working with the amount of money that you have. But for the smaller guys, you know, $500, $10,000, $100,000 with Bitcoin, your orders will go through quite similar to the price of where they're at now. So you don't have control of the price. Because they're going to take orders from the guys that are currently bidding, you're never going to get the exact price of what it is right now. But you will get sort of near it. Unless you're paying with $500,000, $1 million, $2 million, when you start going bigger amounts, it might affect you a little bit because it's going to buy up the list. Do you see here on the list over here? If I want to market execute right now, this is all the guys that are selling. And you can see the quantities of Bitcoin, 0.1, 0.2, these sort of things. So if you come in and you want to now buy 10 Bitcoin, it's going to buy all of these little guys up all the way, and it's going to average you out of all those buys and accumulate all the Bitcoin that you want. So the price may be 19,750 now, but your average might be 19,800 or 19,850 because it had to buy up all the way up to accumulate all your Bitcoin through that time. So as long as you're on high volume exchanges and high volume sort of tokens, it's pretty much similar to where the price is right now. So it's not too dangerous unless you're playing with really, really a lot of money. Then the market execution does become quite tricky. But this is the quickest way to get in and out. So let me show you guys. So if you have a look, I have $289 now, and I want to buy 30% of it now on a market execution. And if I click buy right now, you'll see it will take my money and it's just bought up. There, it's successfully done. And I now have my Bitcoin. And you'll see if I go to the sell section, you can see now I have Bitcoin in the account now. So that's how quick it was. Very quick way to get in and out of the markets, and it went through. And it's the same way with selling. So here's the selling now. There's all the buyers. So I want to now get out of the market quickly because we've either broken a trend line or something's come out and it's not safe to be in the market. I can come in over here and I can click that. And you'll see successfully, now my Bitcoin sold and it's back into dollars. And if you go below that, you'll then see your value in USDT and as well as your Bitcoin value as well of your total assets in this actual wallet. Now, on second thought, I'm going to show you guys just the basic version of a stop loss, and I will do a more advanced video going forward. So I just want to show you guys when you buy Bitcoin, you know, or any token, you always want to also calculate your risk at times as well. So if you do want to do that, it's always good to use a stop loss. And they call it a conditional order over here on Bybit. And you can see it's a little section that's sitting next to the market. Now, you use this once you have bought your actual token. So for me, I bought Bitcoin at 17,500. That's where I've entered, for example. And I have analysis that's showing, okay, I'm buying in this area, but I don't want Bitcoin to go below 19,000. If it goes below 19,000, I want to make sure I'm protected and I'm out of the market. So you can actually set a limit order that triggers when it hits a certain point. Now, the reason why you don't use a normal limit order is because that's already active in the books. And the problem is if there's a buyer or a seller that matches that, it will go through. So if you're putting in a price below the current price now, someone, you know, where you're selling your Bitcoin, someone's going to buy it because it's a lot cheaper than what it is. So you actually want to use an order like this one over here, where you can see it actually has a trigger price. And that just means that this order will only go active. It will only show in that order book when it reaches a certain area. And that's going to save you from the order going through earlier and actually you losing money. So for example, I bought Bitcoin and I don't want it to go below 19,000. Now, if you look, you've got a trigger price and then you've got an order price below that. And what this does is it creates a range for you to set this area on where you want to get out. The problem is with the markets is sometimes you get a really big move, either to the up or to the downside. And sometimes it might shoot through one specific price point very quickly and your order may not trigger. Sometimes you've got a really big whale or something that market executes and it can shoot completely through 19,000. And if it does that and it doesn't hit exactly the number, your order will not trigger and it won't go through. So that basically creates a range. Now, what that means is you're going to set a range between where you want to make sure you are out of the market. So when you put in a trigger price, it's the first point of where you want your order to go active. When you want the order book, you want it to be showing. That's 19,000, right? And then you always want to put the range where it's a slightly lower amount. There's always going to be a little range between it. And I'm going to show you, for example, 18,800. Now, it doesn't mean that it's going to trigger there. It just means I'm setting an actual range that if it goes to 19,000, get me in order book so I can get out. But if it goes straight through that, make sure anywhere between 18,800 and 19,000, it gets me out. So it doesn't mean it's going to hit you at 18,800, but at least it's going to make sure that in that range, it's going to get you out. So you can see over here, there's my Bitcoin. Now I've put a trigger price. I've then put 18,800. This is on a limit market, a limit stop loss. The quantity, 100%. And I click on this. And you'll see then what it does is next to this open current orders here, next to the limit and market orders, you'll have the conditional order, your stop losses. And you'll see here, this is an order that will trigger and it will come to life when it hits 19,000. And it will make sure it gets you out between 19,000 and 18,800. Now, remember, stop loss is not 100% guaranteed, but it is a higher chance of it going through that if you put a bigger range in there to get through. Just don't be surprised if it does sell you off a little bit lower than that 19,000. It all depends on the different sizes that you're actually using. And then you got the second one. So just to clarify on that, you can see your Bitcoin now, your Bitcoin's still here. And it will go, when it will trigger, it will disappear from here when this 19,000 actually hits. So that's the limit stop loss. Then you've got a market stop loss. And remember, very similar to the buying and selling. Quickest way to get in and out, but you can't get the exact price. And a limit order, you got control of price, but you don't have control of time. It's the same thing over here as well. So the market one is to make sure you get damn out. So it only gives you one area of where you got to put when it triggers that zone, make sure I get out of the market. And it's the same thing over here. I can set this at 19,000. You see, it doesn't give me another order price below that. I set this in. Remember, it may not sell you at exactly 19,000, but as soon as the price gets there, it's automated to say, okay, get you out of the market. So it may sell you a little bit below. It will sell you into the order book. And however big your amount is, it will make sure get you out. So you'll never get the exact amount that you want, but it will at least get you out. So if you are learning and you don't understand the limit stop loss just yet, and you need to play with it a little bit more, the market one's a very simple one to use because it just makes sure you get out of the market and make sure it's protecting you. And you can see I can click that and it will create the order there for me. So as soon as 19,000 is triggered, it will market execute me out of the market. So quick recap, guys. We got the tokens top left. You then have your charting area over here. Make sure trading view, because then you can use all of the different tools. You got your order book. You got your buy and your sell sections with your limit, market, and your conditional. You got your values at the bottom over here. You then have your open orders where it will show you where you've put your limit orders, your buy orders, all of these sort of things, your stop losses, your trading history. And remember, if your trades are invalidated, to cancel them so you can reevaluate and you can reset it again. So now we have a basic understanding of how the spot platform works. Now it's time to learn my pride and joy, the leverage platform. Now, as you can see, my beard literally grew in the last few minutes because this does come with higher risk and it does come with extreme high stress levels. If you don't know what you're actually doing it for and what it actually does and how it actually works. So let me give you a basic view of how leverage works. You have a wallet inside your exchange where you're able to trade the exchange's money. That's right. They will actually borrow you money. And what they are saying is, we'll borrow you this money. Tell us which way the market's going to go. Predict. Are we going long? Are we going up? Are we going short? Are we going down? Now, it sounds great, but the way they do this, they do trap you. It is a way of trapping you. And, you know, the markets have always run off of leverage in these sort of ways because they make it sort of seem too good to be true. But the way it works is if the trade is correct, you make money off of the bigger amount that they have borrowed you. So you make tremendous amounts of money off of a small amount of cash, right? But if it goes wrong and it goes wrong to a certain extent, they can actually liquidate you and take all of the money. Remember, they have risk themselves because they basically giving you their money, they're giving it to you and they're saying you decide. But if you get it wrong to a certain point, they do liquidate you and they do take the money that you have put in. And you can lose all of it. So it is super important, guys. And this is why I say this is a very small percentage of your portfolio and it has to be a purpose. Now, for me, it is only to make some dollars and it's to make expense money. I've always used leverage just to pay my bills, to buy my clothes, to take my family on holiday. The reason being is I traded for very short amounts of time. I make my money and I get out very quickly. So it does take a bit of skill of learning how to chart and learning how to predict the market on shorter timeframes. But it also comes very serious that you have a structure and a rule system behind it. And that's why the next leverage course is going to be outstanding. It's going to teach you a lot about that. But for now, let me show you how the platform actually works. Now, the first thing, if you go back into your dashboard, you can then go to the top column. It's called the derivatives column. And if you go below that, you can see it's a USDT perpetual. This is what I'm going to be showing you guys, the one I use on a daily basis. Now, once you have gone into it, let it load up. It looks very similar to the spot platform, right? Where on the top left, you're able to select your tokens. This is all the different tokens that are provided on the leverage platform. And you can see they're all paired to the USDT. As I said previously, that is the main USD coin that we use. That is paired with all the different tokens. Now you'll see your charts again. You then also have the trading view option, the standard option. The trading view option is great. As I said, you have all of your toolbars. You're able to draw all your stuff, your trend lines, where I should be buying, all of that, etc. Then you have your order book on the right. And then you got the section where you actually trade. Now, the first thing you need to know that's very important is you have two options when you're in the leverage platform. You have a cross mode and you got an isolated mode. Now, I'm just going to give you the basic view of both of them. Now, sometimes you're going to have multiple trades where you trade a few different tokens, right? Now, in this cross mode, they allow you to trade a specific amount of different tokens. But what they do is they make it all sit under one basically order, if you want to call it. And what it means by that is if I open a Bitcoin trade and a Ethereum trade and a Cardano trade, I open 3 trades, right? What they do is when those trades are going, let's say in a success, they're going good, they compound all of your profits, and you'll see how it will all be built up here in your available balance. And what they do is they allow you to also add to your positions and grow them, okay? Now, the downfall of it is if one of those trades go against you, let's say your two trades are doing well and your one goes really bad, and it goes to that liquidation zone that I was speaking about, it will actually liquidate all three of your positions. So it does give you a little bit of benefit to the upside because you're able to make your accounts bigger and you're able to make your trade sizes bigger. But if it goes against you and one goes against you, it completely wipes all of your actual positions. So it's really bad, guys. So I'm definitely going to be showing you guys isolated is the way to start, because isolated, it basically makes each trade individual. So whatever happens to that single trade will not affect the other trades and will not affect the outstanding money that you have sitting in your accounts. You don't get the plus side of compounding as it goes up, but it's not worth it, guys. Trading is about consistency and keeping it consistent. So isolated is definitely one I'm going to be focusing on. Now, if you go below that, you will see that there's two options. You can long the market and you can short the market. And then you can see it's got this little X button. This is the amount of money that you want to borrow from the exchange and what they're willing to actually borrow you. Now, it's quite simple. You get a 1x, which means they borrow you nothing. That's your money that you've put in. You can see over here, I have $500, right, in my equity amount here. Now, if I go to a 2x, it means I want to borrow 2 times the money that I have. So it means that they'll actually give me another $513. So if I open a trade, I can actually trade with $1,000, yet I only own $500. Now, where do they catch you? How do you get liquidated? How does this stuff work? If your trade goes into a loss of the same amount of money that you have put into the trade, you get liquidated. Now, what I mean by that is I only have $500, but I'm playing with $1,000, okay? Now, what happens if that trade goes wrong by 50%? If it's $1,000 and you minus 50% of that, that's $500, right? So that means when your loss gets to the same amount that you have put into the trade, it will liquidate you. So that's on an example of a 2x. Now, let's say you go on a 10x. Now, guys, never, ever, ever, even a 5x is a lot. Don't go above it. Ignore what everyone's told you. It is very risky. They even allow you up to 25 to 50x. Do not do it. It is gambling. You will get liquidated very quickly. But let me explain to you how it actually works. If I go on a 10x, they're willing to borrow me 10 times the amount of money that I actually have to open a trade, right? Now, if I have $500, it means I can now play with $5,000, okay? But let's say I now buy Bitcoin at 22,000 right now where it is. And Bitcoin goes down and it goes wrong by 5%, okay? Now that basically puts me in from 5,000. Now I'm $250 down in the red, okay? But remember, I've only put in $500. So it means already half of my account is already in a loss just on a 5% move because I'm playing with $5,000 and not my $500. Now, what happens if Bitcoin falls down 10%? That now means 10% of $5,000 is $500. That's when I get liquidated. So if the trade goes wrong by 10%, I will be liquidated and I will lose my money and I will never get it back. So it's very important, guys. To be a trader, it doesn't matter this X. Like, it doesn't matter like, oh, I'm 10x, I'm a 20x trader, I'm better than, like, that is completely wrong. It's more about playing with little bits of amount because now you have higher risk, way more higher risk. And if you take this percentage, the X bar, and whatever you put it on, it basically means for whatever percent the trade goes wrong against you is the amount of percent that you're going to lose on your actual account or on your actual position size. Now, for example, if I take a 3x, that means for every percent that moves on the chart in the wrong direction or the upwards direction, I will make 3% on the money that I'm actually having. So you make more, but you also lose more as it goes. So keep it low. Keep it anywhere below 5, anywhere in that sort of region. That's where you can start calculating it because you've got to be really strict with stop losses and protecting yourselves. You don't want to get liquidated. It sucks. I've been liquidated many times, and you don't want to get to that sort of point. Also, another thing, if you're starting new, dip your toes in the water, put in $10, learn how it all works. Don't put money you can't afford to lose. It's not there for that, guys. It is literally there for you to learn a skill and to make little bits when you need it. But you can't go and learn with money that you can't afford to lose. You put little bits in, understand how it works. Will this suit your lifestyle? Will it help you? Yes, no, then you'll understand should you be doing it or not. So it's very simple. So below that, you got the long and you got the short. And this is where you're able to select that X that I was talking about, that when I'm long in the market, I'm going 3X, and I'm short in the market, I'm going 3X as well. So I'm going to use 3X as the example, which means I can use up to 3 times the amount of money that I currently have in this account. Now I click on that. Then below that, you will see that you have an open and a close section. It's very similar to the spot where you had a buy and sell section. This is now called open and close. And all that it means is I want to open a position, I want to open a trade, or I want to close a trade. And you can see below that you have the limit, you have the market order, and you have the conditional as well, which is your stop losses. And if you see that below, now what's important is, let me actually show you how this works. So I have a 3X here, okay? I think Bitcoin's going to go up now. So below here is the amount that you want to enter in the trade of your position. You can see I have $500 sitting here at the moment. I'm on a 3X, which means I'll actually be playing with $1,500, 3 times the amount. So always remember that. Remember that it is inflated. Now I say, okay, I want to buy Bitcoin. It is right now. I'm going to do a market execution. I'm going to open a trade. And you can see here, it's telling me that under that long position, that you're putting $250 of your own money, okay? But you are actually buying $750. So that's how they're borrowing you that three times. Now, if I click on that and I open that trade, you will then see how my position will open up. It will basically tell you first what it is you're buying. It will tell you your liquidation price. This is where they take all of your money, guys. And I'll click on that. And you'll basically then see how my position is open at the bottom over here. Now you will see that you have your quantity. This is the combined amount with the money you have borrowed. That's how much Bitcoin you have bought. That's the value of it. That is your entry price. That is the market, the current price that the market is right now. This is when they will liquidate you and take all of your funds. This is the position margin. This is how much money you have actually put in the trade. So out of your money. So I've put in $250. But my position size is $750. Then have your unrealized PIN. This is going to tell you your profits for what you're making on the trade. You're either this much % up, you've made this dollars, or you're this much % down. And this is how much you have lost in dollars at that specific point. Then you got the little bar here, which is a TP and a stop loss little tool as well. I'm going to teach you guys the 2 different tools on how you can use this. So let me actually show you. So once you've opened a position, you're then able to put a take profit and a stop loss, which is very important. If you're ever opening a trade, you want to put your take profits and your stop loss, especially your stop loss. Manage that risk from the start and be consistent with it. Don't move your stop loss down. Don't do those things. Be very strict with what you are doing. So what I'm basically looking at here, I think Bitcoin's going to go to 23,000. So I'm able to set that in over there. And then over here, I want to say, I don't want Bitcoin to go below 21,500, then my stop loss must trigger. It must protect me, get me out of the market. I can reevaluate and then look at the next trade I want to take. But under these things, don't confuse yourself. You have percentage bars, okay? Now, people think this percentage is the amount of your money that's in the stop loss or amount of profits you want to take. It's actually just a quick calculation board for you to say that I'm in this trade, I think it's going to make 10%. So if I click on this 10% bar here, it actually already calculates where the 10% mark is for you. So right now, Bitcoin's sitting at 22,000. That's my entry price. And if it goes to 22,789, I'll make 10% of the money that I've put in. So you see that this isn't the quantity that you are doing in and out of the trade. It's actually a calculation for you to say, I'm making 10%. I want to make 25% on this trade. And it actually calculates what that number is for you. And then below is also another percentage on your stop loss. This is how much you're risking on the trade. I only want to risk 5% of my money here. So if you click that 5%, it already tells you what that balance is and where your stop loss should be. And it works it out for you. So you can either manually put what you want in there, or you can use the little feature tools here to help you with that, to calculate it for you and help you. And once you confirm that, you can then look at your little chart over here. You can see what it does. In this area over here, let me get rid of my little drawing tool. You can see that it basically shows you this is where you bought, okay? This is where your stop loss is. So there's the line of your stop loss, and that's where your take profit is. So you can actually see it on the chart now, which is actually really nice. Now, I'm going to close this because you've got the little options here on the side here. If you want to close it, quickly get out of the market execute out, or you want to limit order out. But I'm going to click this and I'm going to say I want to get 100% out of my position. And I click that and now it closes it because I want to show you there's also another feature here that you must use. Other than just that little tool of setting your stop loss and your take profits. Because the problem with that, the one at the bottom, is you have to open the order, and then once you've opened the order, then you go set your stop loss and your take profits. Where there's actually another feature here, where you see these little bars where it says buy long with TP and stop loss and sell short with TP and stop loss. You can use this with a limit or a market buy into the market. And what you're actually able to do is, if I want to long the market now, I can click on this first. So it hasn't bought me interest yet. I can say I want to buy 50% of my Bitcoin where we are right now. And when it buys, I wanted to already put my stop loss and take profits. So I want to put a 5% stop loss and I want to put a 25% take profit points. I can then open my long and you can see it already opens it as a full order. It shows you here where your take profit's going to be, where your stop loss is going to be. Let me get that up there again. And it shows you where your liquidation price is going to be. And if I click on that, you see it opens it and it already puts them in. Use this, guys. Very, very, very important. Remember, this is the quantity that you're putting in the trade. And these little percentage bars over here, it's a calculation for you to tell you, I want 10% profits or I want to only risk 5% of my trade. So don't confuse those. It's very important. And then you've got the closing option. This is when you want to close your trades, where you're either in a long now. I got a position over here and either I want to 100% execute, close my trade. I want to get out of my long or my short. You see, if I click that, I'm either able, I can basically close my long. So if I've long the market, 100%, I want to get out right now. It's not safe anymore. It's been invalidated. I want to get out. I can then use that little section over there. Then if you go below that, you then have the transfer section, the deposit section. You want to put funds in here. This transfer is very important because as you're making profits, don't compound them, flush them back into your spot wallet. Remember, for me, I'm using this to make dollars. I make some dollars, I send them to my spot wallet. I maybe buy some medium-term trades, or I buy some coins and I send it to my long-term. Don't compound here. The more you build here, not the better, guys. Very important to understand that. And let's go below that. Now, I want to show you one or two really cool features with Bybit and why I love it very much. Now, the first one is when you've opened a trade. Now, you need to be a little bit more experienced and understand charting or TA quite well, because sometimes you're going to buy a token at a very critical stage. Like it's at its last support. This is where Bitcoin must bounce now. So I'm going to buy, I'm going to protect myself. But if we lose this, I think we're going down. And I think we should actually look at a short. And you actually got something that's called a reversal trade button. And if you have a look over here, that where your position is, if you look in the middle, it's got this little arrow that goes up and down, right? And it's called a reverse position. And what it actually does is it switches your long into a short, or it switches your short into a long with the exact same size and amounts that you actually had in that position. So sometimes I'm buying at an area, and when I buy at that area, it's now not holding, but I actually want to open a short now because I think that's going to go better. I can actually go here, and instead of closing the position and reopening a whole nother one, I can just click this one over here. And if I click that, it turns me straight. You could see now I was in a long, and now it's turned me straight into a short. And that's a really cool feature. Don't use it too often. Use it when you're at really critical stages and understand how it actually works. But I think it's a really phenomenal feature to get you to change your longs into a short and your shorts to a long very quickly. So that's really cool. Then what we have, let me get this back into a long. Then the next thing that's really nice about Bybit is we have a trailing stop loss. So the way a trailing stop loss works is not a percentage. It's basically a stop loss that moves with your position. So if I'm in a long, as I am in right now, and we are going up, I want my stop loss to move up with my trade. Because sometimes we put a stop loss in and then we go sleep, and then the market goes up, and then it comes all the way back down. And you gave away all of those gains going upwards, which is very important. You know what I mean? You don't want to lose money on stupid things like that. So you can actually set a stop loss that moves with your trade. Now, the little tricky thing about it is you need to calculate with whatever token that you're using, because it basically asks you for value that you wanted to separate from your entry price. So for example, you know, My stop loss on Bitcoin now, let's say, would be 21,800. That's $200 away from where I am right now. So that means it's a 1%, and I'm on a 3x. So that means I'm risking 3% of my capital. And I want to make sure that if this trade goes off, I want my stop loss to trail with that. So if I set this at $200, remember, Bitcoin's worth $22,000, but 1% is $200, okay? That if we break out now, either we're going to fall now and stop me out and I lose 3% of my capital, or we break out. And I'm going to be away from my computer now. I'm not going to be there. So I want my stop loss to follow that too. And if I put in $200 here, which is 1%, so if it's Ethereum, you must work out the value of Ethereum and what is 1% of that. And you're putting in not the percentage, you're putting in the dollar amount actually. So you just got to do the calculations with that. But if I put in $200 over here, do you see it sets my stop loss over here? It sets it at a $200 gap from where we are now. Now, the interesting part here is if this takes off and this starts to shoot up, this will follow in the exact same direction, and it will always keep that $200 gap between. And the benefits of this is if this thing turns at any point, at least it got me out. So this works really well when you've caught a trade and it's running really hard, because we know how as quick as it can go up, it's as quick as it can come down too. So when that thing's rallying up, put that trailing in because it follows it all the way up. And as soon as that token loses steam and it gets a sort of rejection, at least it's going to stop you out in a nice, decent profit as well. So this is really nice. You can use it for long and shorts as well. And then below that, guys, on the bottom right corner, you got all the different information sections over here, the volume and all those sort of things. Look to use all the tools. Understand how this all works. Remember, next to it, it will show you when you've taken profits, where you closed your trades, in and out of profits. It will then show you any orders that are active. You then got the conditional, which is your stop losses. Then you got your order histories. You can go have a look at all your previous trades. This is great for your trading journals. I took profits here, I did this, I did that, because then you can go track, where was I right, where was I wrong? So use all of this, it's very important. And the last thing I want to show you guys, which I use, is you also have this calculator in the top right corner. And this is nice because before you take a trade or anything like that, you can actually come calculate what you are taking that trade on and what would happen if I did have to take this trade. So you can come and say, I want to work out what my profit and loss would be if I wanted to trade the specific coin. If I wanted to trade this on a 5x, I wanted to buy one of the Bitcoins, you can work out the different percentages of what it is. And if I wanted to enter now at 22,000, let's just put that in, 22,000, and I wanted to close at 25,000. Have a look. There we go. It would basically tell you that your profit would be 13% to the upside. It will tell you how much you would actually make on your money, because you remember 5x, and it will tell you the amount of dollars you would make on that Bitcoin if you had to put it in, and how much you would actually have to put into the actual margin. So you can come and actually calculate that, which is really nice. You can even separate it directly into the target price, your liquidation price. Where will I get liquidated? If I take a 5x now, where's my liquidation? So before you even take the trade, to have to figure that out, you can actually calculate all of that. So you can use all of this. It's really going to help you very, very much. Now, guys, I want to close off here. Remember, take your time with this stuff. This changed my life and it did everything for me. I still use it every single day of my life. Not every single day, but I use it all the time when I need to make cash, when I need to do stuff. I literally even trade these days to help other people. That's literally what I do. So take your time with it. This is very risky. Don't put money that you can't afford to lose in here. Understand what it is. Dip your toes. If you want to see what it's about, put a very small amount in. Learn the power of it, because this can control you. It can become very addictive. Don't use it for that. Don't allow this to beat you. Rather use it and be like, wow, you know, I didn't have a lot of money when I started. So the fact that I could use more, it did kick my butt in the beginning, but eventually it changed everything for me, because I was able to grow my account a lot bigger. As an investor, it's very hard to come into this market with $1,000 to make $1 million. You know, you need tokens to do tremendous amounts of things. But if you actually started slowly building accounts and flushing out and doing that stuff by using bigger amounts that you don't actually have, you know, it did inflate my account a lot. And eventually I started de-risking so much, where I have such a small percentage that I use here on a daily basis, but my long term is now full. My spot wallet is full. You know, I have a lot of money diversified, and it really helped me very much, guys. So if you have enjoyed this, guys, smash the like, smash the subscribe button. I'm bringing you guys a phenomenal trading course after this, a leverage course. It's going to be really exciting. Please use our links as well. It really supports the channel. It helps us to continue this. I hope you've all enjoyed it, and get ready for the next course. I'm Sheldon the Sniper, and I'll see you all on the next show.